Okay, let's take a look at adjustment number 5, which is deferred expenses. So I'm focusing on the expenses as an adjustment. Deferred, what does that refer to? It refers to an expense that is prepaid. So you have paid in advance. You have paid for next year. So meaning it's not falling within your financial period that you are referring to right now. So let's use an example. If the trial balance says the insurance for up to date, the total insurance, all your insurance altogether for the year is coming to 23,200. But they mentioned then in your information that there is 4,000 Rand in there that is for a specific contract that runs for 12 months, if you count the months, from the 1st of September, let's go with 25, to the 31st of August, 26. Now, if you look at your calendar, there's some of those months that falls within the following here. So you paid too much, and you're going to have to remove this from your books so that you can have 12 months according to the matching principle. Let's work out how much do you need to take out. So if you look at your financial year, you start on the 1st of March, we say 25, and then we go through to 28th of February, 26. This specific contract runs from somewhere in the middle here, the 1st of September, and then it goes to the 31st of August, 26th this year. If you count September, October, November, December, January, February, there's 6 months that should be included in this financial year that you're currently busy with. But the March, April, May, June, July, and August, those 6 months must not be included. Those 6 months are deferred. Now, how do you calculate that? There's 2 ways you can do this. First of all, you can just take the 4,000 Rand and divide it by 12. You get a funny amount, but just keep it on your calculator. It's 333 recurring. Or you could say 4,000 Rand, because it's 6 and 6 months, you just divide it by 2. And you know that 6 months will come to 2,000 Rand. That's a shortcut if you get the math. Otherwise, I would just take this 333 and times it by 6 months. And you'll see in your calculator, what is that? It will round off beautifully to 2,000 Rand. So what is this conclusion? 6 months will represent 2,000 Rand, and I need to remove that from this amount that I had in my trial balance. So now we go to the general ledger and we see what the accounts will actually look like. Within the financial position section, you'll have your deferred expense. Okay, we'll come to that secondly. And then on the other side, in the nominal section, you have got insurance. That's the expense we're using as an example. Now remember, the total for an expense sits on the left, and we said, I think it was 23,200 for that, which is too much. There is an amount of 2,000 Rand that's relating to next year. So when I want to remove it, remember this is an expense, I need to put it on the opposite side. So I'm going to have to put 2,000 Rand on the credit side of my insurance, and then my double entry will sit on the debit side over here. There's my double entry. Question now, why would I debit deferred expense? This is an asset. Somebody owes me. So I've paid for insurance that they have not yet delivered. So therefore, I'm going to refer to it as an asset. And that makes complete sense. Asset debit, expense goes down. So your new expense will be around 21,200 when you total it again. And that is correct because that represents the period that you are busy with, the 1st of March 25 to 28 Feb. Lastly, Yes, you can reverse this account as well. So on the new day of the new financial year, be it 1st of March, 1st of January, whatever in that exercise, you will put things on the opposite side. So now you will add it to insurance because you've already paid something. So it will sit there on the left on its own when you start the new year. And then the 2,000 Rand over here will be credited. So you can see there's a debit and a credit, so that this account becomes zero and disappears and was only used to do an adjustment.